Good morning, everybody. Welcome to the Flow Show, Thursday, 24th of October. We've got a bit of an odd day today. Looks like another little pause in a lot of markets after some of the moves we saw yesterday. We'll get stuck into the charts in a little while. Good morning, K-Man. All good?
Morning, Ryan. Morning, everybody. Yep, all good. Waiting for the next round of data. But yeah, it's been a pretty interesting morning already, I'd say, looking at the price action. There's a couple of things on the move or showing some signs of wanting to be on the move.
Yeah, definitely. Could be a few dead cat bounces in the works, or it could be the start of a bit of reversal in some pairs and some assets. As I said, we'll look at that in a moment. We've got all these IMF, G7 blathering going on this week, a real volume blast of speakers. So let's get through those as quick as possible. We finally heard from some Japanese officials. Finance Minister Kato had no comment on direct FX levels and then pulled out the old lines: desirable for currencies to move stably, reflecting economic fundamentals, closely watching FX moves with a sense of urgency. FX moves are currently one-sided, and rapid moves have been seen in recent FX markets. So a bit of minor jaw boning. Now, I need to point out we have two Katos in play at the moment. We've got the Finance Minister Kato, and we've got the Bank of Japan. I think it's an Executive Director Kato. So if you see Kato popping up in newswires, make sure you know which one's what, because what they say could infer vastly different things, particularly when we're talking about intervention and whatnot. Ueda was out and about as well. He's saying that they're still maintaining fairly easy monetary stance and that the bank wants to lift inflation expectations to a new level. He says underlying inflation has been rising slowly. He says when there's huge uncertainty, you usually want to proceed cautiously and gradually. But then he said the problem is if you proceed very, very gradually and create expectations that rates are going to stay low or stay at low levels for a very long time, this could lead to a huge build-up of speculative positions. He says what keeps him up at night is the appropriate size of rate hikes from here on out. So he was waffling on there. That speculative position comment, Kay, was he having a little nod to what's been going on in the yen previously?
I do think so, Ryan. I think so. Both him and Kato on roughly the same line. And we're keeping the market on the side of don't think that it's that we are going to stop around here. So yeah, I do think that both combined is a bit of a warning to the market, at least to the speculators who think that we can go straight away to 155, 160. Kato also reminding us that despite elections coming up, they have all the right of speech over there, which I think is a bit normal. You still want to check what markets are doing when you're a Minister of Finance. So yeah, I think the warnings are there. I said yesterday, we have the potential, looking at the speed where we are and what we do, that we get some more warnings. I was waiting for Ueda to show his hand, and of course he speaks a bit both sides of the line, but there is a bit of this underlying warning to markets saying that don't go too far, guys. We are keeping an eye on things, and we are more than likely not done yet. Now, of course, this is 1% move from the highs. We've seen 7 or 8% move or 9% move from the lows. Right now, we could see it as a correction. We are actually right now trading below that infamous 152 again. But yeah, I do think that we need to be a bit careful, as I said yesterday. It's not don't go buy dollar yen at 153 because you hope for it to go to 153.5. That's not how things will work, in my opinion. So be careful what you do here. And that in combination with what we are seeing today, the dollar losing a bit of its shine. So that is keeping the dollar yen in check right now.
Yeah, absolutely. And yeah, a little bit of a turn. We'll get, as I said, we'll get into that in a bit more detail. Bit of a little change or a little hint from RBNZ's or. He says low stable inflation is again in sight. We must at times act swiftly to avoid perils. He says monetary policy in New Zealand is still at a restrictive level. And then he said we can be more incremental on the way down. I'm taking that as a hint that maybe the next rate cut won't be a 50 like the prior one was, but you never know with these guys. But potentially a little change there from the RBNZ. Riksbank's Jensen says the risks of too high inflation have diminished significantly. PMI day around the world, starting off in Australia. Their manufacturing PMI came in softer, services went up, a pip down in manufacturing, a pip up in services. So seeing the old disparity again between the two sectors. Over in Japan, they saw a soft one as well. Manufacturing coming in lower, 49.0, was expected to rise to 49.9. Services as well now moving into contraction, 49.3. Over in France, the PMIs there. Manufacturing, again, a little bit worse. Miss expectations down a pip on last month. Services also going backwards to 48.3, so not good news there. Germany, you see some green numbers there. Manufacturing went up to 42.6. Services went up to 51.4. You may think that's good news for Germany. That is probably one area where it's maybe a dead cat bounce because the underlying details within the report were still pretty horrific. So even though the euro got a little jump on that, when you look at the details, it still paints a less than rosy picture. Bloomberg threw out, well, they were checking their seaweed and tea leaves and whatever for rate expectations, and they popped a headline up saying that traders favour a half-point ECB rate cut in December. So we're playing the pendulum game, 25-50s for those guys. BOE's Bailey said disinflation has taken place faster than we expected in the UK and elsewhere. It says inflation is below target, but is being pushed around by annual base effects. So a little bit of fence sitting there on one side, saying that disinflation has been faster, but then saying that some of that is base effects. There's still some central banks who are expecting a pickup in inflation into the latter part of the year. Right, ECB wafflers. Not says pretty confident inflation will hit 2% in 2025. We can take our foot off the brake if the base case holds. He says a structural undershoot of the 2% inflation goal is not a risk now. So that's we've been talking about undershooting inflation, and it's important to make the distinction between, you know, a temporary move below target or something that turns into something a bit more long term and a bit more dangerous. So we've already seen a bit of undershooting going on. It's whether it stays undershot or whether it gets back up again, and that's what Knott's going on about. He says a large economic deterioration is needed for bigger cuts. Big Dove Centeno banging on still again, saying 50 pips on the table, but the data will determine the cut size. Hawke Holtzman says some colleagues are likely to push for a big December cut, but says current data doesn't justify 50 pips in December. He says the market pricing of cuts likely is too aggressive. He sees a soft landing from Europe as guaranteed, which is a bit of a strange comment because they've been landed and dragging along the ground for the last year or so. So that plane, as I say, that plane landed a long time ago. Then this morning he was out with a few more comments saying a 1/4 point rate cut is possible in December. A 1/2 point move is unlikely, but not impossible. He said the ECB could also hold in December thanks to the October move. So he's a bit all over the place with that expectations. ECB's Lane says some recent data raises the questions about growth projections. The ECB is not pre-committed to any particular rate path. He often speaks in the same vein as his master. And the master spoke yesterday as well. Lagarde saying rather satisfied with progress on inflation. Nagel says they're maintaining rate flexibility in every direction. A bit like shooting with a blindfold on. ECB's Vilroy sees full optionality for the December meeting. Doesn't think the ECB is behind the curve. That comment confirms they're behind the curve. ECB's Pancetta, economy in the euro area is clearly weakening. I wouldn't take for granted that we will stop at the neutral rate. Any gems you can pick out of the ECB bods, Kay?
Yep, the doves are doves, and the hawks don't know where to where to go anymore. That's how it looks. I think if we look at Queen Santan, that's a middle of the road cutting. So I'd say it's just don't expect don't put too high hopes on those 50 bps cuts by the ECB unless we get even worse data out of Europe. She already mentioned enough and all of them the weak growth in Europe. We know the situation. The market knows the situation. They know how to deal with it. But I think if you listen to all of them, we're still on a rate cutting path. But the next 50 will be a bigger discussion than any other rate decision that may have had. So yeah, I wouldn't really expect. But yeah, it's just everybody recognizes the weak growth now in Europe finally, and that's what we'll have to deal with. I think coming for the euro as well. Even though we may find bottoms versus dollar for instance, but I'm not sure that on the process front euro is ready to stand up yet, unless this morning's German PMI was a hallelujah and they are going to save Europe now. Doesn't look like it yet, but who knows, you know.
Yeah, that's a hope trade if ever I heard one.
Yeah.
Just to finish off the data sweep, we had the UK PMIs as well, and softer on both numbers, which was a bit of a disappointment. But in the details, there's, and as I mused in our chat room just before the numbers, there's a bit of budget shenanigans in there. A lot of businesses just holding off until they know what's coming from the budget, spending plans and the like. So soggy numbers, but not necessarily awful numbers or starting to show that things are going to turn meaningfully negative. There were some negative comments about the jobs market, which we'd already known anyway, generally. So, yeah, soft one from the UK, but I won't say everything's dead and buried there just yet. Back to the US session yesterday. A few bits and pieces out. NBA mortgage rate stayed unchanged. So the brief hawkish spurt that we got over the last few weeks seems to have paused. Applications, though, posted another loss. The refinance index also came down a good chunk. This is just something to keep an eye on when you're talking about rates or expectations for Fed rates. You know, if they're not going to cut as fast, rates will stay higher. That could impact people refinancing mortgages. Why refinance now? You might as well wait to see if rates come down further. So purchase is also down a little bit. So this is weekly data. I'll just keep half an eye on it just to see if there's anything bubbling underneath. We also got some home sales data as well, which was a tiny bit soft. Existing home sales were down 1%. No big swing there. Prices, median prices for homes were up 3% from this time last year and up 3.1% from last month. So we're not seeing any big moves down in house prices still. Bank of Canada, they went and did their 50, as was widely expected. This one was a bit of a surprise. They went to 50. They said more rate cuts are likely if the economy evolves as expected. They said the jumbo cut was meant to boost growth and keep CPI close to 2%. The timing, pace of future cuts will be guided by incoming data. They did slightly cut their CPI forecasts as well. Macklem said we focused on inflation when considering the 50 pip cut. Core inflation is easing as expected. So there was a clear consensus for the 50 today. Monetary policy has worked, and it's worked largely as we expected. After all that, the Canadian swaps mob were pricing in a rough 20% chance of another 50 in December. What was surprising about the BOC was that we got a bigger move in the loonie over the September 25, which was massively expected and part of their rate cutting cycle. And I think we moved about 12 pips when that 50 dropped, much to my disappointment. Kate, the BOC, a bit of a damp squib in the end.
Yeah, sorry by the rumors and the fact. Yeah, I'm as surprised as you are. It seems like a lot has to do with, first of all, some dollar moves and the market really expecting the Bank of Canada to do it. So they did go to 50. I don't really have that much to say, but just that positioning has probably dictated the market moves and people long dollar CAD getting what they wanted. We're also we're coming into a bit of we were coming into some levels there as well. Could that be the case? It's to me here, the Canadian dollar is a difficult call because I was expecting if the dollar would falter or disappoint, I was expected still the Canadian dollar to be a bit weak on the crosses, but it's not even. Yeah, I guess the market just got what it wanted and now doesn't know what to do with it. I mean, Maclem's press conference was completely ignored because he still looks for potential further cuts. But yeah, I don't have much to say about it. I'm just looking at that Euro CAD somewhere around, what is it, 48, somewhere around 48 3/4 or so. Looks to be interesting, but then I don't have a great feeling on the euro still. Yeah, I'm afraid I don't have much more to say about the Canadian dollar right now, Ryan. What happened though with stuff like the Canadian dollar, and we've also seen it in Aussie, the Kiwi, you get the move. Then you get a complete counter move in the currency to what just happened. We've seen it in Canadian dollar on the jobs report. We've seen it on another data point, inflation lower, which actually didn't weigh on Canada at all that day. And then now the rates decision. So I'm still not out of the question whether we've seen the top in dollar Canada, or whether this is just a pause, people taking profit like we're seeing elsewhere.
Yeah, no, I agree with that. We got up close to my level up here in the 3860s. Didn't quite tap it, but that's pretty much marked the top. Yeah, I'm in the same mood. It made that new high. Okay, so it's keeping the momentum going, but it has obviously definitely slowed down a bit. Whether this is going to be a top or not, I think if you get another test up here and it holds, that might be the time if you're thinking about trying to fight this move and go short. But yeah, we need to, at least for this phase, I'm not going to fib it because it's only a few days, but we're probably around the 38.2 around this 138 level. Obviously, fibbing this one's no point yet because we're not, the 38.2 isn't probably till about 137-ish. But yeah, 138, 138.10, that's your near-term support right now. If we're under there, then maybe we're going to go and test some of these lower levels. Right, just finishing off the headlines. The IMF are doing their waffle on. I don't pay much attention to those clowns. They have absolutely no impact on anything whatsoever, despite their own sense of self-importance. But IMF's Gaspar said the UK has debt sustainably higher than projected pre-pandemic. So moaning about UK's higher debts, but they've cheered on Reeves's plan to move the fiscal rules goalposts to give herself 50 billion for spending, which he'll be coming from more debt. So they're happy for her to change the rules to find 50 billion and increase debt, while moaning that debt is sustainably higher. So that tells you what a bunch of clowns they are. And that's one of the big headlines floating around for the budget, that she's found this 50 billion magic money tree. And it may mean that tax hikes won't be as harsh as many have expected, but we'll get to see. They could still be two completely separate things, but these bits and pieces are all dropping now ahead of next week's budget, while they're all over in Washington having a good old knees up. BRICS, they're having a shindig as well, and Putin has told the BRICS meeting and told Iran that they have become a fully fledged member of BRICS. So they're now in the circle of trust, according to Putin, which is, again, another part of this ongoing play where Russia's backing Iran while US is backing Israel and all that sort of palaver. So that's still going on. Anything else for anything else, Kate?
I think you covered everything, Ryan. I mean, it's funny, yeah, Reeves. How come nobody ever thought about changing the rules to find 50 billion sterling? Yeah, that makes the budget perhaps even more interesting, because I was talking about it as well in the room early this morning. I said, like, would it mean less taxes on entrepreneurs? If that's the case, then it's probably going to be, at first at least, a positive for the sterling. If in turn she just uses it to try to make labor shine a little bit and use those 50 billion to other means, I think it may actually come and bite the sterling at some point. But so to me, that makes the budget even more interesting now, since she found a magic trick to create 50 billion, winning, probably one thinking that she won the lottery now.
Yeah, I can't remember what it was, but when this story first came out a few weeks ago, I can't remember the number. I don't know if it was 20 billion or 40 billion or something.
Wasn't it not just exactly the 22 that they said that was the hole that they needed to fill up?
No, I'll tell you what it was. I've got it. It was 15.6. There you go. I even know the number. 15.6 was the exact number that was going to be found. So it is more than what they thought. Yeah, 15.6 I think it was, or 15.8, something like that. So it was more than what they originally touted. But, you know, if you're going to move the rules, you might as well grow the magic money tree as big as possible. But yeah, we'll see what it all means. I personally don't think it's going to affect what tax hikes they're going to do too much, because it is two separate things. It's not, you know, we find this 50 billion and we don't need to hike taxes. They're still going to moan about the fictitious black hole that's they find themselves in. So yeah, it's not exactly that you can tie one to the other, but we shall see next week when that comes out. And then we'll be concerned with how much they're putting the price of beer up. That's always the big talk at the budget. Right, let's get stuck into things. Ali, I'm just going to come back to your comment. you're tinkering with your risk reward profiles and you're running trades and whatnot, saying you've removed your take profit word from your dictionary, and you will now ride every trade. Okay, just one little bit of advice: don't go too extreme the other way. If you were trading with profit targets and now you're going to ride trades, don't run too far to the other side of that boat. Don't think every trade you need to run. Okay, you still need to monitor your trades. If you're trading a certain way because of a technical aspect, fundamental aspect, let's say you've been short the Kiwi and Orr came out with that comment that they might not be going big on hikes anymore. Okay, if you get things that might change your trade, there's nothing wrong with then saying, okay, I'm going to protect myself by taking all the profit off the table. Okay, so don't be too. I'm not saying you are. Just don't be too rigid in saying you're going to ride everything. You've got to manage those positions as you go along. Right, so levels hit pretty much in dollar CAD on the top side. Level hit in euro dollar on the downside. I mentioned this 107.60 down here. Not a level I trade, but one of those watch levels, and that's exactly where we bounce from now. But the techs are playing nicely. We can't get through the top of this zone. That's where resistance was when we broke down. That's where resistance is once again, 108.0910, call it, up at that level there. So that's what's got me thinking that these at the moment are perhaps nothing more than a dead cat bounce. Again, until we're above 108.70, somewhere like that, we are not turning around this trend just yet. So if you're buying it down here, then make sure you're taking some profit on the way up, but don't just shut your eyes and think we're going all the way back to 109. We can't even get through 108.10 at the moment. So be cautious. If you get another test and hold down here towards that 60 area, we've already had one little look over the data point. So if you get another look down here and it holds, then maybe we're building a bit of a base, but we did that here as well. And then look what happened. So just watch your price moves here. I don't think we're out the woods yet, but prices have got to bounce somewhere. And this might be it. It might not be it. Dollar yen, and this is, I wouldn't say that jawboning last night had a huge impact. Maybe the market just suddenly saw, okay, someone's woken up and decided to speak about it. This dollar yen, if you're going to be looking at this, you've got to keep your eyes on yields at the moment, because that was a big driver of the move up, and it's possibly a driver of the move down. We had nearly new highs in 2 years, and it's just come off a bit. 10 years have come off a bit more after those highs, back below 420. Again, this could just be a little bit of a minor pullback. I think the European Open, the US Open today is going to be very important. James in our room has been giving us a little bit of an insight on who's been doing what in the dollar, and a lot of it is from the US side. So if those guys and girls have finished sending yields up, selling bonds, buying the dollar, then we could maybe see a bit of a steeper pullback in yields, and thus the dollar will follow, and obviously so will dollar yen. This 152K's just become a bit of a washout level now, it seems.
Yeah, we are building on those levels. We've seen that in many currencies, right? And we're always musing about those levels in our room. That it seems like an obliged station where the market wants to trade, and I think it might become one of those bit of an attraction magnetism around 152 now, which is kind of logic, seeing all the activity we have seen in the past around there. But for the longer we are going to turn around, the less importance as such the level will have. Is going to be probably a starting station from for a next move, but will it be a big move? That also remains to be seen. I think at least what Ueda and Kato did was to slow down the or to give a bit of caution to the speculators, because we see that most of the yen crosses, and I always like to look not only at dollar yen, which is of course extremely important, but all the yen crosses are a bit lower this morning. So that is something that I always keep an eye on. And so they did manage to make the market think at least about what to do. Is it finished? Who knows? You know, I mean, the next set of data. Imagine this afternoon's PMIs. What do we have tomorrow in the US? The Michigan. Um, yeah, they have the potential of putting it back above 153 if they beat, right. On the other hand, as I already said at the beginning of the show, I got the impression that the market, it's a bit like when you're driving and you approach the traffic light, you're slowing down, and it looks as if the market is seeing a traffic light, sorry, coming up in the distance, and they're slowing down on the dollar purchases. This is what I find. I can show a few currencies pairs later, which all stopped at reasonable levels. You're shown the euro dollar already, which is the biggest currency pair, of course, but that is an interesting one. But there's a few others that have stopped at levels where going through there would have really meant that we may have seen a bit of a blow off top in the dollar into the elections. But having stopped there is equally interesting, because the market says, well, hang on a little bit, we are not going to perhaps go one way, or we don't want to stay blindly long dollars, and that's where I am at right now as well. I'm not getting to be a dollar bear, but I'm really thinking that we may have ran the best of this dollar move. That is where I'm at right now.
Yeah, yeah. No, I think I agree with that. I've just had a little nibble here as well, short dollar yen, as we're holding below that 152. So I'm a little bit short. Not going to give it not a big trade. Over 25s, I'm out. But we're just starting to hold a bit here, so we are respecting it short term, but still a lot of volatility in here. So I'm not saying it's going to become a brick wall, but I'm giving it a little go. Let's see what happens.
Ali was
Yeah,
asking
go on,
for
mate.
levels to the downside. Do you want me to show it, or you can actually stay on, but if you go on to there's a little longer one.
Yeah,
That 50-80 on the downside, I think is maybe showing up 53 quarters, 50-80 over there, right? That one.
yeah,
Yeah. Look left, you will see that as well. Look closer to home. It's been hanging around there. It is that famous 50% of the move from 162 down to 140. The 50% is right there. If 152 doesn't play too big of a role, I think that 150, call it 70-80. Don't go pin down dollar yen these days to 1 pip. Okay, that's for all our viewers. The yen is trading like an emerging market currency style right now, even though it's one of the majors. It is style trading as an emerging market currency. So every level you need to give enough room for it to come and show up, because 150 70 80 maybe 150 60, or maybe 150 90, where we stop. I mean, that is the nature of how yen flows right now. And but that zone around there, I think, could be the level to the downside, Ali, and anyone else who is interested in the yen right now. And it would be, and there you come back to your 152, would be a bit of a symmetric move. We went up to 153.30s or so, back down to 158. It would be a bit of a symmetric move around 152, if you want to look at it that way as well.
yep, very much so, mate. Very much so. Quick look at euro sterling. Had a nice little secondary bounce off the figure yesterday. Quite a decent one as well. Got us all the way up into the 50s, but it's come back a bit since then. So we're not out of the woods either with this one. Still got this downtrend in play, but maybe a little bit of a turnaround. That might have been a little stop run, but we couldn't get through the big figure second time around. So maybe it's it's starting to build there. I may look at this one if we get another hold down here. I might try a little long one, but I'll be keeping an eye on how close we're getting to that budget. Gold, and then I'll pass it over to Cayman. I want to have a look at quickly because we had the break back under 27.40, got down to that 27.13 level, knocked under it. Again, this is, you know, these levels are all very short term, as you've got to treat them as such, but give or take, we're back above, and we've just started to hold it again around there. We've had one little look back at 27.40, and it's holding so far. So bit of indecision in this one, bit of a coin toss. You know, if we continue to hold again under 27.40, then that's going to potentially set up this type of traffic that we'll get here. Then we'll see where the levels are going to appear on the downside. So, Ali, I saw you got long. You're going to need to get it above that 27.40 area again. If not, then maybe we're going to test the downside a bit more on that one. I'm still long. If we get a bit of action here, then it's going to set up the possibility for yet another break trade, much like we had here. So that's what I'm looking at for this. Let the price develop, see what the levels want to do, and then I'll either, if it's breaking down, I might look to get out, or if it's looking like it's building for another break, then I'll try and maybe add on a break to the upside. Again, just play the same old patterns that we have before. Right, Kate, going to ping it over to you, mate.
Yeah.
There you go.
I'm going to look at a couple of other. Well, I had the euro dollar on just because we were chatting about it. Yeah, what I think is that traffic light. You know what I'm talking about. This is, me too. I'm starting to look at it as potentially ran the biggest of the move lower in the euro dollar for now, and I wouldn't be surprised to see a bit of a move back, corrective move back up, because I still think that the overall move is pointing to perhaps a bit lower levels, but I would not be surprised if we if those US data slow down a little bit, that we could see a bit of a revival. I'm this being said, in my heart and even my soul, I'm not a euro bull. I was just musing about the euro dollar this morning. We had like one overshoot in the versus expectations, even if it's still bad numbers on in Germany on the German PMI. So the next move for the euro dollar is definitely has to be back to 160. But that was just a bit of a joke that I had in our room. No, what I wanted to look at is a couple of currencies that also may have ran their course, and then I'm thinking about this Kiwi. We had this is a fresh line, of course, but we seem to be in a bit of a, this could still be consolidation or whatever, and whatever you want to mean, look at it, however you want to look at it for lower levels. But looking at the dollar itself, and I'm starting to think that it may kind of be enough, the major run. If we get another move back down here, below 60, the figure in the Kiwi, I may get tempted to counter trade this. And if you look at 60.5, it's a round enough number. I could call it 50, 55, of course. But if we start to get back above there, I think there is a case of Kiwi moving higher a little bit. It'll now depend mostly on the dollar. But looking around, and another one that I was looking at yesterday was dollar Norway, and I said, like, well, we are coming to interesting levels here. We traded above 11, up to 11.10. If the comparison between Norway and Kiwis, it may not be evident to anyone at all, but they are in a way risk currencies as well. So if risk is doing a little bit better, if in that respect, and we're seeing oils creeping up again as well, you see stuff like we're just not getting to the level, but perhaps close enough or so. but it may mean that the dollar has ran most of its course. And in the euro and the dollar Norway, yesterday I was pointing at 11.10, and unfortunately we didn't go all the way up there, and we're already shying back now. But it does point at the dollar potentially having done the best of its move, or having found real levels where the dollar can retrace from. And the cable is another one. Yesterday, I was looking at the low 129. We had a little overshoot, but as I said on the in the room as well, I don't like too much when it's pretty steep, but then because then those trend lines they go up a bit too fast for me. But we did hold the 129 level on the cable again, and we are pushing a little bit higher. It all may mean that again the dollar has found some resistance right now. So yeah, for what the dollar yen is concerned, I'm not sure that we can still trade this longer term trend line, but this is the 150.70.80 again. It's also where we broke above this little channel. So I think around 150.70.80, if we get down there, people will look at what's happening in the market. Okay. That's your first level, and if it would break, then we're talking about 149s. All right. So that for what the dollar side is concerned. Now let's look at what's happening on gold. The longer term still unchanged. These are, I think, the 28 zone, 28 and a quarter is somewhere. If we get there, we need to reassess what's going on. We need to also reassess what's going on in the US elections, because it is still one of the trades, I would say, that especially if Trump gets it, we could see an explosion here of gold higher, because this is going to be a hedge trade against Trump as well, together with what is still going on in geopolitics and whatnot. Okay, if in turn we're getting a Harris coming into the seat, it is still going to be negative for what the debt is concerned, but that trade may all of a sudden look a bit crowded, and then we see bigger setbacks. I do think that globally, all in all, gold should find levels where we buy it in the longer term for higher levels, but the elections nearing closing in are going to make this more and more important of where we go next, and especially at what speed. Okay, I mean, we're going to have to be very, very careful at the speed of things in those metals. I think I'm going to throw this one in the bin again. This potential head and shoulders, although it's around there right now. Okay, we're trading on the level. We're trading actually bang on that prior high around 72.30. So watch out. I've been told of this is not a head and shoulder is not a continuation pattern from the purists, but I still like the look of it. So if we break above these levels, confirmed through 72.60s, maybe gold is is going to move a little bit higher. If we start to fail here, then we can come down a bit more. But again, looking at what the dollar is doing right now, it should, or it could not come as a big surprise that if you get even a bit slower PMIs, although for a commodity that should not be too positive, but just by the fact that the dollar is weakening a little bit, we could see a bit of a push through here, and then that would bring us somewhere in the 73s, why not all the way back up to 75s. And what else is going on? Yeah, the BRICS brand, that's an interesting one as well, because I think somewhere in the background, the BRICS could be also supportive for what's happening in gold. And also, I've seen this line that India and China seem to want to thaw their relationship. So it could be that is helping gold as well to be beat. Okay, it is very possible. Now, last one. Schweiz, and I know that there's been a question about the Swissy. It's a case of whether you believe in Swiss your pulse, whatever. But I think the level here is 93.30 in the short term. We are not too far away, 93.5. But if let's say, for instance, if risky is doing a little bit better or so, Swiss, there should not be too much of a reason for the Swiss to strengthen. Now, this being said, I've seen an article saying that their deficits are doing a little bit better. So I think in things like Euro Swiss, for instance, I wouldn't really want to bet too much on much higher levels. It's probably going to stay inside this area here. Call it 93.30. If we get back below 93, will be important enough. If you get back above 94, as we see here, those moves above 94 have never been too long-lived either. So I think it's rather a case of ranging, but probably looking at the euro towards the bottom end of the range. Dollar Swiss, again, bit of a disappointment, tried above, and it can't stay above this 86.70. There is a bit of support coming in right where we are now. That's going to be around 86.5. So watch that 86.45.50. If we get back below, we could be trading low 86s again in the dollar Swiss. And that is it for me, Ryan. Back over to you, mate.
Thank you very much as always, mate. Good stuff as usual. Right, I think what's the time? Yeah, we shall call that a session. So have a great day, everybody. Trade safe, trade well. Let's see you making some pips. Let us know tomorrow. Have a great day, everybody. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.